Hello, welcome to the European Open briefing for Friday, March the 10th. I'm Rafi Boyajian, currency analyst at xm.com, and we're going to be taking a look at what's happening in the currency markets today. So we have the dollar continuing its this week's gains. It's now back above the 115 level against the Japanese yen on the back of rising US Treasury yields. And this is mainly after that ADP employment numbers on Wednesday, which raised expectations that today's non-farm payrolls numbers will also be very strong. And this in turn would cement expectations that the Fed will raise rates when it holds its FOMC meeting next week. The euro is another currency doing well, at least in terms of how it's been performing more recently. We had the ECB policy meeting yesterday where President Mario Draghi was a bit more optimistic about the Eurozone economic outlook than in much of the recent past. Basically the stronger dollar and higher treasury yields have pushed gold prices to below the key 1,200 level to around 5-week lows. Another commodity struggling today is oil. It's stuck below $50 a barrel, and that was mainly down to the large build in US crude stocks that we had last week. So let's begin now with the dollar-yen pair. We can see the upward trend over the past couple of days. For the pair, it's now about 115 level, currently trading at 115.39 at 7-week highs. The dollar index, though, is not as strong this morning, and that's mainly due to the firmer euro. The dollar index is currently flat, which measures the dollar against a basket of major currencies. But overall, we've got a very bullish outlook for the dollar. US Treasury yields continue to rise. They rose to the highest since mid-December when we had the last Fed rate hike then. Treasury yields, 10-year yields are currently at 2.624%. So all eyes now will be on the February non-farm payrolls report, which is due out at 13:30 GMT. Private payrolls are expected to come in at 190,000, and average earnings are expected to quicken slightly to 0.3% month-on-month in February, and perhaps the average earnings numbers will be more important in today's report, because that's going to be more key going forwards in terms of how the pace at which the Fed will tighten policy for the rest of the year, because rising wage growth is seen as putting upwards pressure on headline inflation. But for now, given that the March rate hike, which is expected next week, has been mostly priced in, it's unclear whether or not how well, at least after today's report, how much the dollar will rise afterwards. Moving on now to the euro, we can see that the euro is testing the 1.06 level. Yesterday it got a bit of a lift from a less dovish Mario Draghi when he held his press conference following the ECB meeting. The European Central Bank held its policy unchanged, but in its latest staff projections, the ECB revised up its inflation and growth forecasts for this year and 2018 as well. And Draghi was a bit more optimistic, and he also pointed out that there is less urgency for further action. Although he did say that the Governing Council would like to see a more convincing upward trend in underlying inflation. Headline inflation is, of course, 2%, which is slightly above the ECB's target. But it looks like the ECB has yet to be convinced that the underlying inflation is on a sustained path upwards, and that has capped the euro's gains. But the German bond yields did see a bit of a lift from Draghi's remarks, and that helped the euro higher. And also worth mentioning that we've got more polls out of France showing that Macron is continuing to see improvement in his opinion polls for the French presidential elections, and that's also supporting the single currency. Moving on to gold now, because gold has been sliding downwards since late February. It's now fallen below the 50-day moving average, and this is on the back of those rapidly rising expectations that the Fed will raise rates next week. And that's pushed prices to 5-week lows. Although if you look in the chart compared to US Treasury yields, we can see that even though US Treasury yields have been flat since December, gold had been rising upwards since late February, and that was mainly due to the uncertainty surrounding Donald Trump's policies and the European elections, and perhaps to a lesser extent Brexit, and all of that will likely continue to provide some support for gold prices in the meantime, even as we see rising rates in the US. And finally, let's have a quick look at oil, because oil, of course, saw that big tumble on Wednesday after the US inventories data showed a very large build in US crude stocks. WTI oil is stuck below $50 a barrel. And well, basically markets would like to see an extension to the OPEC non-OPEC deal beyond 6 months, because for now they see that the current agreement is not doing enough to reduce the supply glut, and of course we've got a US production that's continuing to rise, so that's undermining the OPEC's efforts. And one currency that's been hurt by this is the Canadian dollar, because it fell to 10-week lows. USD CAD rose to 10-week highs of 1.3534, and overall it's been a very bad week for oil. It looks set to end the current week down by over 7%. Let's have a quick look at today's calendar before we go. We had some German trade data, which was above expectations, though it had not a very big reaction in the currency markets. We've got UK industrial output and manufacturing output as well coming out. Those will likely be watched because recent UK data has been on the weak side. So if you do see another weak set of figures from today's numbers, it might put further pressure on sterling, which is coming close to dropping below $1.21. But of course, later in the day, the highlight will be the non-farm payrolls report out of the US, and we're also going to have employment numbers out of Canada as well. And also, just a quick mention that next week, of course, we've got the FOMC meeting and a Bank of Japan meeting as well. That's it from me. Thank you very much for watching, and have a great day.